Retirement Journey with Justin Fort, where it's all about planning for the happy and successful retirement you deserve. If you want to retire with comfort and security, living your current or even a better lifestyle than you do now, this show is really for you. That's what we're all about here. I'm Justin Fort. As a certified financial planner professional with a fiduciary duty, I look at retirement planning in terms of 5 pillars. Number 1 is income, lifetime income that you and your spouse can outlive. Number 2, growth of assets to combat inflation. Number 3, liquidity to handle both emergencies and opportunities when they come up. Number 4, shield against calamity. You don't want to be wiped out by unexpected events like illness or long-term care needs. And finally, the 5th pillar, leaving a financial legacy to the people and causes you love today and in the future at your passing. Once you understand that the 5 pillars are the most important parts of what your plan should be built around, you realize that makes them functionally unable to complete retirement planning if you don't have them. If you want to cover all 5 areas and do it with the confidence that you have a fiduciary on your side, call Fort Wealth Management, 800-886-5624. We'll do a free, no-obligation 5-point review measuring what you have in place now against what you're probably going to need. Within an hour or a few visits, you'll know more about your retirement plan situation than maybe even your broker does now or your financial advisor does now. You'll know your likelihood of success based on what you've got versus what you could have, and you'll know what you need to do to close the gap so that you can have as much as you can have in all 5 areas. We need to close the gap. On today's show, we're going to talk about how a Massachusetts regulator charged a securities firm with making an improper sale to an elderly investor. Oh, if that was all of it. Wait until you hear what they did to this poor lady, and wait until you hear the opened to the door to the deal. Who did that? You're also going to talk about 10 rules for living in a rising rate in world. Also, The Big Short. You probably heard of the movie, The Big Short, as in shorting the stock market. We'll talk about that. Also, is cash the best defense in troubled markets? You might be thinking that. We'll talk about that. I have a couple quick little articles I held over for the past 2 weeks. One from Forbes Investing saying you probably have no idea what you pay your financial advisor in fees, and a good, clear rundown of the differences between a stockbroker, a financial advisor, and a planner. So let's jump right in. So Massachusetts regulator charges securities firm with improper sale to elderly investor. The investor was sold aggressive investment strategies despite stating low tolerance for risk. This is by Christine Idzelis of Investment News. So Massachusetts securities regulator William Galvin has charged a securities firm operating at Citizens Bank locations with dishonest and unethical conduct for selling an elderly woman funds that were riskier than her stated investment tolerance. Mr. Galvin is seeking restitution from the firm, Citizens Securities, for the unnamed investor who lost about $7,000 when she got out of the investment portfolio. Despite indicating a low tolerance for risk, the investor was sold aggressive investments. The Citizens Bank branch, where she met the financial consultant, didn't adequately disclose the location's brokerage activities and didn't identify who the consultant worked for, leaving the impression he worked for the bank, according to the statement. The elderly woman also bought a market-linked CD without understanding the higher degree of risk compared to a regular CD, which she knew from her previous banking experience, according to the statement. So notice that they say the older woman bought. I would submit to you that she was sold a market-linked CD, and really not adequately disclosed, of course. But listen closely. This next part is crucial. Citizens Securities consultants offer investments through Envestnet, an automated advisory platform. Automated, I said. Hope you caught that. It goes on to say, the complainant states that based on limited information provided by investors through the financial consultants to Envestnet, Citizens Securities offers a small number of fund complexes. Fund complex is like a mutual fund family. You may be more familiar with that terminology. Let me repeat. A small number of fund complexes is what they were offering from which a portfolio can be generated. Once a fund complex is selected, the financial consultant cannot alter what the computer produced. Did you hear that? Once a fund complex is selected, the financial consultant cannot alter what the computer produced. So now it's in the computer's hands. How comfortable are we with that? The article closes with a quote from Massachusetts securities regulator William Galvin. And I quote him here: investment advisors are a fiduciary, and they cannot walk away from that obligation by saying, the robo-advisor told me to do it. Isn't it interesting that Mr. Gavin says investment advisors are a fiduciary? Well, they must be, but not all financial professionals are, right? We know that there are different standards with different licensing, so it can get complicated to the average person out there, and probably for this lady as well. In my view, anyone who handles someone's life savings should probably be held to some kind of a fiduciary standard for sure, and be well educated and trained, all those things. So this is important, and not turn things over to a robot and then try to blame the robot when things go sour. So what does this mean to you? Well, basically, buyer beware, especially if you are counting on a bank to help you with investments. This lady didn't know that the bank's investment advisor didn't actually work for the bank. That might be a good question. She assumed he did, but she was wrong, and she got hurt because of that. This is not how it works at Fort Wealth Management. Just want you to know, you talk with a human, myself, Justin Fort. We don't work with a small number of mutual fund complexes and then rely on a robot. We actually have fiduciary service, portfolio management offered by chartered financial analysts, certified financial planners, done the right way. And we take responsibility and a fiduciary duty over these kinds of recommendations and management. So in my view, relying on robots is probably the wrong way to go. If you want to meet with a person and you want to have fiduciary service, you can call us at Fort Wealth Management, 800-886-5624. Again, we'll do a free, no obligation 5-point review, measuring what you have in place now against what you'll need. You'll know more about your retirement plan, and you'll know what you need to do to close the gaps in all 5 areas. Again, that's Fort Wealth Management, 800-886-5624. Love to see you. Coming up next, 10 rules for living in a rising rate world. Stay tuned.
When you go in for dental work, you don't have to wonder about things like anesthesia, sterile equipment, and expertise. They're givens. Your dentist has a medical duty to take care of you. As a certified financial planning professional, I have a fiduciary duty to take care of you. You don't have to wonder if your retirement can survive a bad illness. It's in the plan. You don't have to wonder about hidden fees or unnecessary taxes or a dozen other variables, because I have a fiduciary responsibility to do what's best for you, and I'm trained to do it. If you're wondering about any of these things, you don't have a real plan, and that could destroy your retirement. Call now, Fort Wealth Management, 800-886-5624. Spend an hour with me, Justin Fort. See the science behind real planning. See how you could have a great retirement. Call now, Fort Wealth Management, 800-886-5624.
And we are back. Welcome back to the Retirement Journey with Justin Fort. Well, let's jump in with this article, 10 Rules for Living in a Rising Rate World by Roger Wohler, MSN.com. From this piece, the Federal Reserve announced in December its first interest rate hike since 2006 and indicated that there would likely be gradual increases in the future. I think the increase is great news, said financial advisor Eric McLean. Rates have been below even normal low rates for a long time. Reverting to a normal range should be good for fixed income investors. So let's take a quick look or run through the 10 rules for living in a rising rate world. Number 1, run the numbers before you decide. What does that mean? Well, you wouldn't want to say that that's true whether rates are rising, falling, or stagnant. You really want to understand what you're trying to achieve, if it's taking a loan or investing in bonds or CDs, and your horizon for that. Number 2, convert your variable rate mortgage to a fixed rate. Well, that sounds great, and I think it's a good idea, especially if you can't handle the increasing rates on the ARM. But be cautious, because maybe rates won't rise as high as you think. That's a difficult thing to forecast. And, my advice might be have this checked out by a financial professional. Come see us. But if it makes sense to hold some money in some liquid positions so that you can go and pay off a mortgage, you might just stick with the ARM. But if you can't, then maybe going to a fixed rate mortgage makes sense. Okay, number 3, shop carefully for new credit. Absolutely. In this time of flux, it's sad to say, but some lenders will take advantage of confusion. So shop around. You might get a good deal. Number 4, don't miss bonds as an investment. Well, it really depends on your overall plan. Bonds are less volatile historically as stocks and other investments, but they may make up a smaller portion of your portfolio. But, again, that's something that has to be figured out in a meeting, possibly with your financial professional or with us. Number 5, watch for housing market changes. Generally, as mortgage rates go up, home prices tend to go down. If you're looking to make a move, consider doing it now rather than later. And if you have cash, you may be able to get a bargain. So that could be some good news there if you're looking at downsizing, especially. Number 6, seniors should prepare for cost increases. Typically, higher interest rates and increased inflation go hand in hand. Social Security will go up with inflation, but maybe not enough, and often not in lockstep, we should say. We didn't get an increase this year. Here's a direct quote from the article. Retirees should have a portion of their nest egg invested for growth. Even cost of living increases for Social Security might not be enough to cover some increased costs, such as healthcare. Growth is pillar number 2 of the Fort Wealth Management 5 pillars approach to retirement. Regardless of economic swings, we always plan for growth. Number 7, income investors should keep an eye on rates. Well, of course. Number 8, consider the impact on the auto financing. Well, of course. Number 9, don't try to time the stock market. Well, this is always what we try to say here. Timing is a very difficult, if not impossible, thing to do. Number 10, do your homework on annuities. This is always true, but fact is you can also dig so deep. That's why you can only dig so deep. That's why you want someone like me on your side, of course, as an independent certified financial planning professional with a fiduciary duty, provide you what's best. It may be an annuity. You may have an annuity already, but it's important to understand and get some help from someone that does understand the difference between different annuities, the fees involved, or sometimes there are no fees, sometimes there's protection from risk, sometimes there's not. There's a whole world there. All right, well, interest rates are important, and that's why it pays to have someone like me on your side. So call me, Justin Ford, at Fort Wealth Management, 800-886-5624. As a part of your 5-point review, we'll also measure your exposure to rising interest rate risk. Inside of an hour or a few visits, you will know where you stand and how we can go about closing gaps on all 5 of your areas. So call now, Fort Wealth Management, 800-886-5624. Don't wait to see where interest rates end up, because it is the movement itself that can cause danger and opportunity at the same time. So call now, Fort Wealth Management, 800-886-5624. Coming up next, my take on the movie The Big Short. Probably not what you think. Stay tuned.
Hi, Justin Fort, host of Retirement Journey right here on 1370. On my show, I seldom focus on quote-unquote safe money. Why? Because when you're doing a comprehensive retirement plan for a great retirement, safe money is just not that tough to work in. If you think about it, there are really only 5 options: cash, CDs, treasuries, fixed annuities, and fixed indexed annuities. They're all safe because they're all insured, so we pick the best, buy, and move on. As a fiduciary, I know that there's much more to a comprehensive retirement plan than just the safe money part. If all your current advisor wants to talk about is safe money, then they're not thinking of the big picture. And real planning always looks at the big picture. Get a real retirement plan from a trained fiduciary. Call me, Justin Fort, at Fort Wealth Management, 800-886-5624. That's 800-886-5624.
Welcome back to Retirement Journey with Justin Fort, where it's all about planning for the happy and successful retirement you deserve. The Big Short, the movie, maybe you've seen it. If you have, this is going to be even more interesting to you. But the Association of Mature American Citizens put out this article. The arrival of The Big Short in theaters a few weeks ago has reignited interest in the causes of the 2008 financial crisis. If you believe that the crisis was caused by greed and recklessness on Wall Street, then you'll like this film. Paul Krugman, writing on the op-ed page of the New York Times, liked it immensely, apparently thinking a Hollywood version of reality was fact. I'm not going to spoil the movie for you if you haven't seen it, but I will tell you two things. While the movie blames pure greed, we have to remember that more than 3/4 of subprime loans were offered through outfits like Fannie Mae and Freddie Mac. And number two, The Big Short is entertainment. Again, right? Not truth. There's some leeway for artistic addition. So what does this mean for you? The term in the title, short, it refers to buying the rights to sell a stock you know is going to be going down, or you feel strongly about that. If you could do that in real life, you could make a killing if you were right every time, of course. The whole concept encourages playing the market timing game at the highest, riskiest level. And we know institutions will short the market in some cases to hedge other long positions they have, and that's really kind of the reasoning brokers will say for continuing to do this kind of work. However, we've got to be careful that if we start to do that to try to get long-term returns, and timing that is going to be very difficult, not impossible. Harvard's endowment fund, by the way, those managers don't do that as a primary way to grow their portfolio, and we don't do that either. And I don't recommend that you do that. Of course, I can't make recommendations over there. I'd have to sit down and speak with you about it. Back to the topic of the movie, the mortgage meltdown that happened in our own backyard right here in the United States, and really almost no one saw it coming. If you want your money to last 30 years in retirement, do not plan on taking more than 2 to 3% consistently. It's kind of the new recommendation, new safe withdrawal rate rule, if you will. You got to make solid plans so you're not tempted to take these kinds of risks. Don't expect shorting the market or trading stocks, in my opinion, to really get you out of a position where maybe you didn't have enough money saved or you don't have a solid plan. Plan for income you can't outlive. That's really important. That can pass even to your spouse if you die. Where your money grows all through retirement is important, because inflation, we don't want that to steal your lifestyle out from under you. These are the 5 pillars we talk about. The shield you need so calamity won't destroy you. These are all important. And of course, you may want to leave something behind or give to charity. That's your legacy part. So come see me, Justin Ford, at Fort Wealth Management. Give me a call. And the number again is 800-886-5624. I will personally do a no charge, no obligation 5-point review with you, which means you'll know in about an hour or maybe a few visits, scientifically, mathematically, where you stand now and what you'll need to do to close the gaps that you have in all 5 areas without having to rely on market timing or shorting or these crazy things that I think are a little more risky than most of really our clients are comfortable with, and probably you as well. So call now, Fort Wealth Management, 800-886-5624. Don't wait. Don't procrastinate. Fort Wealth Management, 800-886-5624. When we get back, is cash the best defense in these troubled markets? Stay tuned.
Is your time worth $5,000 per hour? Here's why I ask. Securities have a good record for beating inflation, but there are many ways to own the same thing. Suppose you want energy stocks for their growth potential. There are 3 or 4 ways to go, and the fees can range from anywhere around 1% to well over 5%. As a fiduciary, I'm required by law to do the best thing for you, not me. I can't tell you how many times people come in with investments that are so costly, I wouldn't even be allowed to offer them to my clients. In many cases, the funds that people have, they're paying 8-10 times as much as necessary to actually own the underlying asset class. And so you may be able to save $5,000 a year by simply coming in and visiting with me for 1 hour. Are you being taken advantage of? Call me, Justin Fort at Fort Wealth Management, 800-886-5624. In 1 hour, you could possibly put thousands of dollars back into your pocket, 800-886-5624.
All right, welcome back to Retirement Journey with Justin Fort. We are going to be talking about the happy and successful retirement you deserve. And let's jump in with some articles here. Is cash the best defense in this troubled market? It's a good question. So some mutual funds are hoarding cash, but financial advisors who buy them risk being accused of style drift and market timing. This is by Ron DeLegge, founder, etfguide.com. And if you want to figure out how much cash is being held in the mutual funds that you own, come in the office. We'll put up on the flat screen. All we have to do, we'll use our software. I'll show you the facts, and you'll see if this is happening in your accounts in the mutual funds that you own. So from this article, rising stock market volatility and the 7% crash in Shanghai listed stocks twice in 1 week have put fund managers around the globe on the defensive. Okay, so the meat of the story was really in the headline, and the subhead is cash the answer. So do you want your mutual fund managers going to cash? Should you be going to cash? Your plan should always include a certain amount of liquidity, of course. If your planner starts moving massive amounts to cash, they're playing the market timing game, and that may not be something that you want them to do. There's not a good history behind that. Not a lot of research supports that. In fact, I haven't seen anything really that really caught my eye. Now, having a few points, percentage points in cash, maybe up to 5% or something like that, that's no big deal because there has to be cash to be able to trade assets inside of funds, and we get that, but probably not 30%. Okay, so sure, have some liquid assets, that's important, but the key is to have a plan with income you can't outlive, where your money grows all through your retirement, one with a shield against calamity and the legacy you want to leave the people and causes you love. And if you're going to have cash, if you want to have cash, have it at the bank or some other places. If you want to have investments, but be careful of market timing. Market timing could be happening inside of your funds more than you think. But we can do a checkup. We'll find out. An effective planner covers all 5 areas as this fiduciary to put you first. Remember, you can call us at 800-886-5624. Get this kind of service that you deserve. As human beings, we're all hardwired to try to guess the future, but that almost always fails. And when I say fails, that usually means people run out of money before they run out of life. You don't want that. Your family sure doesn't want that. Call me. We'll make sure you're not in a position where you're at more risk to run out of money or have your retirement fail. We don't want that. 800-886-5624. Together, we can craft a solid, workable plan for your future. When we come back, I've had these 2 articles in the hopper for 2 or 3 weeks. I hope I can get through them both. We'll see. You're going to want to stay tuned. First is on fees and how you may not have any idea how much you're actually paying. Second is a short piece differentiating between stockbrokers, financial advisors, and financial planners. Stay tuned.
Hi, this is Jennifer Carter, Justin's sidekick here on the show. During the week, I'm his executive assistant at Fort Wealth Management, where we spend our time helping good people like you plan for the retirement you deserve. Most of those plans include Social Security, and most of the people we see don't realize that there are hundreds of ways to take their Social Security benefits. That's why we do group classes, where we explain the basic options and how to optimize these amazing benefits. The thing is, you need to get the knowledge before you start taking benefits. Because once you start, it can be difficult or even impossible to go back and change what you've selected. Would you like to be in one of our classes? Call our RSVP line at 1-800-769-1614 and we'll get you on the list for a time that's convenient for you. Here's the number again, 1-800-769-1614.
Welcome back to Retirement Journey with Justin Fort, where it's all about planning for the happy and successful retirement you deserve. Let's see if we can get through these articles. You probably have no idea what you pay your financial advisor in fees. Here's why. This is from Roger Gershman, Forbes Investing. Are you and your investment advisor making the absolutely best investment decisions? You're not if you don't take fees, charges, and expenses into account. The article goes on to describe things like expense ratios, which you can find in your prospectuses, which I know you've read every prospectus that has ever been handed to you, I'm sure. I'm joking. Most people don't. Which includes fees for the fund manager, administrative costs, and marketing expenses. Also, T-transaction fees, fees on certain types of annuities, commissions, management fees, markup fees, or inside credits, and more. It talks about how difficult it is on your own to figure out just what you're paying because fees differ from one firm to the next, and they can even differ inside one investment firm. There is no benchmark, and they don't have to give this information, which is why so few do. Wouldn't it be nice if they were required to do so? You would imagine they would be, but that's not the case. So what does this mean to you? It comes down to this. What should your retirement plan have in it? No one can tell you that until they know what your goals are. They can't tell you that. That's why we start right there. What are your goals? What do you want your retirement to look like? Think about it. Then we see where you stand right now and figure out what it's going to take to give you the highest probability of making those dreams come true. And, there may be fees involved, but, if there's good value and it's what you need, it's part of the plan, then so be it. I'm willing to pay fees when I go to HEB or I go to change oil in my car. I'm okay with paying that, but I know what I'm getting. I look at what's in the cart. I picked it from the aisle there. And so having a plan for what you need is so important. Fees are part of life, and it's true. You probably have no idea, though, really how much you're paying in fees. But if you want to know, and you want to know exactly what you're paying, then you can simply visit with us. You can get that kind of clarity and have a plan by calling 800-886-5624. That's 800-886-5624. Call now. Don't delay. Work with me and sleep well at night. We're going to have a plan. We're going to know what you're paying in fees, and you're going to know what you have so you can sleep well. On to the next article. The difference between a stockbroker, financial advisor, and planner explained. This is from Forbes Advisor Network. Here's a brief guide to help untangle these concepts. Brokers and insurance agents. Brokers and insurance agents can and do sell financial products. They adhere to a suitability standard, which is fine, but just know that this standard of care means they can benefit more from products they sell than those products actually benefit the client, as long as their products are very broadly considered to be suitable, meaning that it's okay, it fits, right? Not like a custom suit or something, but just fits off the shelf, right? Advisors and financial planners. This term is confusingly broad. Some advisors have no designation, while others can be a CFA or CFP or CHFC or CPA or PFS and so on and so forth. These types of designations are acknowledged in the financial industry, and they do mean something. They all require study, passage of exams, and adherence to its standards of oversight. For the purpose of this discussion about compensation, I'll focus on financial advisors who interact with the general public and who either A, sell products, or B, don't sell products. Advisors who sell products can hold any of the above mentioned designations, of course. They can include fee-based advisors, although they sound like fee-only advisors. Fee-based advisors do sell products. Fee-based compensation is popular because advisors can earn compensation from fees paid directly by clients plus fees they're receiving in the form of commissions or discounts from products they're licensed to sell. They are not required to inform their clients in detail how their compensation is accrued. The fee-based model creates many potential conflicts of interest in some cases, especially if there's products that are being sold at the same time. Let me talk about this now. So fee-only advisors, by contrast, do not sell any financial products. If their clients need products, i.e. insurance, they work with financial professionals that they trust. There is no fee splitting or other inducement involved in the sale of products. Fee-only advisors typically charge a percent of investments they manage and are charged in some other way for their time, hourly, or retainer. So, and then of course there's hybrids where some advisors will be fee only for securities, investments, and things like that. But then when it comes to insurance policies and needs then they can act as insurance agents and so forth. And, really any of the models can be good or can be bad. What matters ultimately, though, is your plan and is the person you're working with adequately licensed and educated to be able to put together the plan you need and get you the best stuff for the plan. Remember, it's all about the 5 pillars: income, growth, liquidity, shield against calamity, and leaving a legacy or giving to charity. And once you get that it's all about the 5 pillars, you'll know you need the help of a real life, honest to goodness planner. And that planner should tell you how they're being compensated. You should know it. You should want them to be compensated for doing hard work for you, and because they're going to better your situation. That's exactly what we try to do. I want you to know what you would pay to have this or that put in place for you. You got to start with understanding what you're paying now, of course, and what you've got. So call me, 800-886-5624, make an appointment, spend a little time with me. You'll be amazed at the things you never thought of. You'll also be amazed at how easy I make it, and it's going to feel good knowing that this is how life can work for you and your family. So call now, 800-886-5624. Don't be concerned about not being an expert. You don't have to be one. You just have to know where one exists. Again, we do. Fort Wealth Management, 800-886-5624. Have a happy and safe, successful retirement. We want you to have that. And we will look forward to seeing you next time right here on the show.